Business owners, here's a simple 3-step strategy on the 1-minute chart to trade just 1 to 2 hours a day and see results. It consists out of the 3 steps that I'm going to break down here. That means step number 1, the market likes to go to bigger structure highs and lows. Step number 2, when we can see that the market is nearby to a low, then we go to step number 3 because it makes more sense that it goes to the bigger structure low than to the high as of now, for example. How many times can I see that I can adjust $100 to make $500 and then using first a not real money account? And then it's also possible, what is absolutely awesome on this trading strategy, we can start with $10, go to $30 a trade, and then we can crank up to $100, $300, $500 a trade. First of all, we use the S&P 500 future because if you just use this market and you trade 2 times, 3 times, 4 times a week for 1 or 2 hours, and you can see 20 times that you can adjust $100 to make $500 or you can adjust $300 to make $1,500, it's not a problem anymore that we need a second or a third market or just another indicator. It's just like how to go from quantity to quality. But let's first get into quantity first. And that should solve it mostly, because if you have like 7 losing trades of $100, but you make 3 times $500, that's 1,500 minus the 700, you would still make $800. So actually quality is right or not the issue. It's just like having enough trading signals with good money management. So a bigger structure high and a bigger structure low when using a 1-minute chart, very important because we have 60 candles within 1 hour, is when you make the chart small and you just look at these structures here. Those are highs as you see here, and those are lows here, all these spikes here, right? So what happens is when the market goes to a low, as you can see here, it comes back. That means it retraces in the opposite direction. That's why it's not good to trade again. Some people call this a breakout trade. And then once we can see that the market returns, as you can see here, it will go here to the next low. I'm going to show you an example. I'm going to break down all the 3 steps so you can do this from your computer. That means when you have here a high and you have here a low, that looks like this, for example. That means if you see that the market is going up, it should go up here. Then it should retrace, it's called, and then it should go to the next high, right? If it doesn't have enough power, it will just go on the opposite side. It will just happen the same thing. That means we have here the lows. The market will go down here to a low, comes back, and then when it has enough pressure down, then it will go to the next low. If not, it will just stick to the middle or just does the opposite thing. So always looking out for the biggest structure highs or lows, because I was always struggling with, I sat down on a computer, I saw this bigger structure low, I saw that the market wants to go there, and then instead of trading there, it was more like, okay, let me just wait until the market goes there, like I know that the market is going there, and then when it's going there, I'm going to wait now for 3 hours, 4 hours, 5 hours that the market is just doing anything. But usually when the market reached its target, that means the high or the low, it's going to consolidate, it's called. That means that the market is not just going to move, that it's not that worth it. So very important is to understand. So we have here all these bigger structure lows, and we have here a couple of bigger structure highs here. And we draw them inside first. And what we do now, this is an exercise that I really love. I prepared also an example. It means the first one is, where are the biggest structure highs and lows? The second one is, very important is, by the way, that the biggest structure low here in this case was already touched. So the next low would be down here. The second thing is, can we see that it makes more sense that the market goes up here to this high or down here to this low? And there's an exercise that I really would like to show you. That is that we look at the past 1 hour or 2 hours, depends on how long you trade. That means the last 60 or 120 1-minute chart candles. That means, for example, here we cannot see the future. But when you look at the past, that means what the trader did is he was drawing here a rectangle, as you can see here. And the rectangle is showing me that the trader wanted to trade here for, or wants to trade here for 1 hour. So these are 60 candles. If you look 1 hour back, that means from here to here, you have 60 candles here inside, and what we can read is that the past 1 hour the market did 2 times this move down in length, and it did 1 time move up within a smaller length up here, right? So if the market would do exactly the same, let's just assume the market would do again like going down, it would make sense that the market would hit here this violet line. But when we see that the market was going down within the past 1 or 2 hours, like as you can see here, or just like wiggling out here, if it just would do exactly the same, it makes no sense that the market goes up here to this high. So that's already step number 2. So we have already step number 1, we identified highs and lows. Step number 2, we identified literally, does it makes more sense that the market goes down here to this low here, or does it make more sense that it goes to this high here, or even to this smaller structure high as you see here? Step number 3, and this is the cool thing about day trading futures, because this could be $3,000, $5,000, $10,000 of leverage just with a $10,000, $20,000, $30,000 account, is now if the market goes down here and I would just press sell for 3 times or 5 times just with a position size, decent one that can trade with a $10,000, $30,000 account, can this be a $10,000 or $3,000 move that I can literally have earnings from? And in this case, definitely yes. And that's always depending on the market, of course. If you trade the S&P 500 future, if you just trade like for 1 or 2 hours in the US session, you will have enough times that the market is going in one direction. Now the thing is just that hitting in the right direction and then just the money management. And this is step number 3. How can I adjust $100 to make $500 in average or $200 to make $1,000 in average? In average, in the beginning, a trader has a strike rate that's called of 25 to 40%. That means when the trader, for example, let's just say the trader takes like 10 trades within the next 5 weeks or 4 weeks through different market conditions, it's very important to spray them. Then out of 10 trades, most traders I know, they have 6 or 7 losing trades that are learning in their first 2 years. If we do it right with the management, we could make it that the trader loses $600 or $700. But for the 3 winning trades, the trader could have made 3 times $500. That means $1,500. That means in this case, losing like 8, let's just say losing like 7 times $100 is minus 700, right? So the trader made 3 times $500 and then $800. This could also be replicated to do this with $200 a trade. To go for $1,000 a trade, the trader could have made here $1,600. And this is just the math behind this, that you don't need to be always right. The money management just needs to be right. And this is something what I'm going to show you here with step number 3. If you have any questions until here with step number 3 also, just feel free, use the comment section. I hope I can help you out with this one, understanding that. And if you need more help, that means that if you want to sit down with me together, showing you this one on the computer based on your knowledge, just sign up on this webpage at tradewithjd.com. You find a link under this video. So let's go on. That means if we see that the market is going down, my favorite trading setup is just a color switch. That means a green and a red candle or a red and a green candle. Important is just if I trade for 1 hour in my trading times, how many times were I able to see that I can adjust $100 to make $500? So in this case, you can see here that the market was going down with a lot of red candles. You see here that the market is doing here a green and a red candle. We adjust here. If we adjust, by the way, sometimes you can adjust your position, like how much money you want to use by length. But the formula is always the length and then by position size. That means here, for example, when this red candle is closing, we place it on the color switch here up here. And the length here has 5 ticks. This is a market where it's $12.50 for each tick. So that means we would need to make $12.50 times 5. So that's $62 adjusted when we enter the trade after the candle closes with the stop placement here. Sometimes even accidentally we get something that is called slippage. That means we enter the market one time later. That means again plus $12.50. And the practical side, it would be a $75 trade. If we want to use now, let's say $200 a trade, we need to press sell 3 times, or we just adjust the position sizing to 3. That means times 3, for example. And now we have $200 adjusted for the trade. That means going down here with the risk reward ratio of 5, this would be a $1,000 winning trade. Now here's the thing. Which of these color switches do we see in our trading time that worked? That means what I really love to do is, the first one is to draw in a square. That means like from here to here, that is 1 hour, 6:30 in this case to like 7:05. I'm just doing the video right now, not to the US session time. It just starts right now in 2.5 hours, the trading time around. So I'm just doing this video before, but it would be starting 9 a.m. first, is something what's very important. Then the second thing is what I really love is the past 1 hour. If I look at the 1 hour, like do I see like what kind of length the market was doing in the pre-session even? That's also very important. Then we place it here. Then we take the length here. And now I can exactly expect within 1 hour the market could do exactly these moves down or these moves up. So it makes more sense as of now that the market would reach here this violet line. Then, for example, here, this bigger structure, smaller structure, high up here. So now we identify direction. Now, the third step is literally like, how many times can I see that makes sense to adjust $100 to make $500? I want to wait until the market reached my target. And then first to look at how many times can I see a green and a red candle that when, this is important, when I enter the trade after the red candle closes here and I place my stop on the wick, sometimes there's slippage, like just a small increment is just different, but you can just place it here. How many times can I see that a color switch of green and red for selling would work with a risk reward ratio of 5 as you see here? And how many times for buying it will be red and a green candle? In the practical side, even though you would see something like this red and a green candle here, down here, and then you see like, oh, that could be like 1 to 5. We would consider that first, but later on they're not that important because before this red and a green candle, there are a lot of red candles. What is just more important is that once you see here that here, for example, adjusting here $100, making $500 is until here. Adjusting here $100, making $500 is until here. And when you look also to the left, you will find here a couple of lows where the market likes to go at. And you can all do this trading by just within 1 hour. You will have like 3 or 4 or 5 signals sometimes within 1 hour to adjust $100 to make $500 just using the 1 minute chart. As you can see here, you saw it up here one time. You see it here one more time. And now when you look here like more further, you see here also is the next color switch. And here you can see also adjusting $100 can be made here also $500 or even more with a risk reward ratio of 5. Here's a very weird small color switch. It's because we're in the pre-session, but there will be times they will look nice like this one. You have 2, 3, 4, 5 pieces of that, but I'm also showing on the other videos more about that. So now here's the thing. This one is maybe unrealistic to trade because we have a couple of green candles. But when you see that the market is going down, it does more than 3 red candles. That means as you see here 4 red candles and then just a color switch, and it always just do like 1, 2 green candles. That's something what I really love, especially when looking at the past and seeing that the market was doing more length down as you see here than length up. So this concludes that it makes more sense that the market is going down to these lows, what makes this one very nice to trade. Once the market is making more than 3 green candles as you see here, it's just not nice to trade anymore to sell. It's also not good to buy. It's just better to wait until we can see that the market is doing again 4 red, 4 green candles, literally pushing to a high or to a low. And then we just repeat the process. That means step number 1, looking at the highs or lows. Step number 2 is it more near to a high or low? How can I see that the market has more pressure with the picture step, looking at the past 1-2 hours, for example? Or you just, for example, look that there are more red than green candles, just that you can see it with experience over and over again. And then step number 3 is a green and a red candle to sell or red and a green candle to buy. And always to have a very tight stop placement on the wick of the color switch and the entry after the color switch closes. In the end, what I would like to give to you is also a trick. If you ever had the problem that there's a green candle, it's going to be red. Here on the right side, you see a timer as you see here. It says 44 seconds. That means in 44 seconds or 40 seconds right now, the 1 minute chart candle is going to close. And what I really love is if there's this tiny color switch as you see here, and 2 seconds before this candle is closing to enter the trade, to calculate how much position size I need to adjust $100 or $200 as I just showed you, and then to make the entry, and then mostly the candle will stick to its color. And these are, I think, very awesome trades. Hope you could take something out of this video. Wish you all love, good trades, JT out.